See, most new mortgage brokers assume self-employment means freedom and employed feels like you're playing it safe. But the reality is a lot more nuanced, and the wrong choice early on can slow everything down. This decision isn't about ambition, it's about sequencing. So let's talk about why opinions are so split. You see, some brokers swear you should go self-employed immediately. You're going to learn faster under pressure, but others will insist employed is the only sensible starting route. Both are right in the right kind of context. You see, confusion creeps in when people treat this as a personality test instead of a structural decision. So let's be clear about what we're going to be covering in this video. We're going to look at what actually happens when you start employed, what really changes when you start self-employed, and how to choose based on learning, not on ego. So let's look at what starting employed really gives you. You see, an employed role buys you space. You usually get a basic salary. You normally get some sort of structured supervision, a defined process, fewer consequences for early mistakes, which will happen. See, that matters more than people admit. You see, early on, you're not short on motivation, but you're absolutely short on context. Employed roles reduce pressure while you learn how cases really flow, how compliance actually works, and how experienced brokers structure conversations. That foundation compounds, and that's actually how I got into the industry. So let's talk about what starting self-employed really demands. You see, self-employed routes increase exposure fast. You're going to be responsible for your income, for your leads, for your systems, but also for your mistakes. See, that pressure can sharpen decision-making significantly. I became a much better advisor because of it. But I don't think it's always great for everybody. See, when income depends on speed, structure is often the first thing to slip. Calls can be shortened, processes start to bend, and bad habits form quietly. Some recover from that, some don't. And I see this all the time when I coach advisors who really develop bad habits because of this. See, now let's talk about the real difference no one actually explains. You see, this isn't about money. It's about how mistakes land. In employed roles, mistakes become feedback. In self-employed roles, mistakes become stress. Now, neither is wrong, but they produce very different learning curves. So then who should each route actually suit? Well, starting employed works best if you want to master the process before the pressure, if you value feedback and oversight, and you prefer steady progression early on. See, starting self-employed, that works better if you already have a strong sales experience, you're comfortable managing cash flow swings, and you learn better under constraint. But what this is not okay is this isn't about playing small. It's not about fear, and it's not about a forever decision. Many successful brokers move between both models all the time. The real lesson here is that the smartest brokers optimize for learning first, and then they leverage later. Now, if you go on your own and you decide to go self-employed, you're then going to hear all these things about going AR or DA, and what do these even mean? And if you want to know how they work, what they are, and which one you should choose, check out this video on screen right now.